zooming out the entire month of March. I mean, no other community is taking the time to do this and understand in detail the markets in which they're trading to this level, right? Alrighty, cool. So basically today I want to just put everything in a nutshell, just kind of talk over some of the things that we've discussed, and then obviously, of course, end the call by doing a market outlook, taking a look at the fundamentals and how they could impact the market and create price swings or just create momentum. Obviously, of course, we know algorithms, dark pools, and institutions are the ones that actually move these markets. So when I say fundamentals moving the market, I don't mean that like fundamentals are placing orders in this market and moving price action by any means, but we know that fundamentals create sentiment, and then these institutions digest that sentiment and make trading and investing decisions based off that sentiment. So that's why it's important to know these things. It is what 95% I'd say of retail participants are ignoring out there. So many retail traders come into the game and think that it's just technical analysis that you need in order to master these markets. It's not, it's a whole slew of things. It's psychology, it's fundamentals, it's technical analysis, it's institutional insights, and then combining all of that into a package of confluences that give you an edge in the market. And learning these fundamentals is one of those pieces of the package that gives you an edge. Okay. So I want to tap into that and I want to show you all that exactly what we talk about here in the CYPRX private community is literally what these large banks and institutions are paying attention to. So we're going to be reading through some institutional research reports. Literally, they sound like, as I'm reading through the institutional research report, they sound like the research reports that I type you guys out every single day during Asia or New York session. Okay. So we're going to get into that. I want to kind of talk about this video here that was shared in the chat that literally, look at this, only has 15 views, people. Come on now, guys and gals. We're showing you all some information that just so many people aren't tapped into. I have some highlights of what this lady here said, the global head of research at Signum Bank. So I want to kind of talk a little bit thoroughly through those. And then we'll get into the technical analysis. I want to show you guys inverse correlations right now with everything that's kind of going on in the market, what we talked about yesterday, look at the market perspective today, and then we'll end it with the inverse correlation. And then we'll talk about, the overall trajectory and where I see the market going, as we have PCE towards the end of this week. Market's been pretty muted over the last 48 hours after the, slight rally that we saw over the weekend heading into Monday, and the recovery that we've seen so far since mid-March. I just kind of want to paint a long-term perspective for you guys, but then also sprinkle in some short-term price action as well. Okay. So that's what we're going to be discussing and talking about today. So again, this might be a little bit of a lengthy one. So we'll actually start here. Let's see. Let me just make sure I have my um, Okay, cool. So this is just what we're going to full circle back to. And the reason why I highlighted this stuff is because this is that institutional research report that we're going to tap into. And it also mentions here, it says the report explains that the market's calm tone may persist until April 2nd. That's something that we've been paying attention to, right? The announcements, the further developments surrounding Trump tariffs. We've talked about how they're not really going to really materialize until April. We'll have better insights, more announcements. And so the volume and volatility is most likely going to pick up around that time frame. Um, you got the influencers that are naturally out there trying to manipulate the minds of individuals, thinking that price action, volume, and volatility is going to flow in every single day. That's not how the markets work. Sometimes markets just move sideways until there's a narrative to trade or make investments off of, right? And so we're waiting right now for that narrative before we really see price action make another major move to the up or down side. I also like this research report because right here it gives a little glimpse into the research report that we're going to take a look at today. And look at this, like this is so crazy. This is coming from an institutional research report and it's literally placing the fundamentals in a timeline for you guys on the price action charts, right? Who's been in this community where I've done this for you all multiple times? If we go and we take a look, okay, just to prove, because I like timestamps. I'm one of those dudes that's like, if you can't prove things in the market, then don't believe in people that are touting you guys that they do things. So this is our Zoom call from over a year ago that we started these fundamental calls from March 24th, 2024. Okay. So this is a Zoom call over a year ago that we posted. And in the Zoom call from over a year ago, you can see that we were doing this. We placed fundamentals on the charts to kind of show the impact and the sentiment that the fundamentals created, which lead to investors' decisions with much more money than you and I that actually move these markets, right? Then if we scroll down to more recent times, just in the Zoom call 2 days ago, right? Sorry, excuse me, 3 days ago, the 26th, today's the 26th, and this is our Zoom call recording from March 23rd, 2025. So we've been doing this accurately for over a year. And this was the Zoom call that we had all the fundamentals attached to the price action, showing you guys what has taken place, zooming out the entire month of March. I mean, no other community is taking the time to do this and understand in detail the markets in which they're trading to this level, right? We're not talking about indicators here. We're not talking about, oh, if there's resistance at an RSI crossover, blah, 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 blah. We're talking about moon cycles, right? All the stuff that if you took that information into an institution and presented that to them as that's how you gather your insights and technical analysis in the markets and make your trading decisions, they'd laugh at you and kick you out. Whereas the stuff that we're talking about, if you took one of our research reports into an institution and said, hey, read this, what do you think about it? They'd probably be like, oh, that's actually pretty good, right? That's actually a pretty good analysis of the current market conditions and doing an overall market outlook, right? So again, take into consideration what myself and Scalper are trying to teach you guys, whether it be from a technical analysis standpoint, a psychology standpoint, or a fundamental standpoint. So here's that research report website, K33 Research Pro for professional institutional investors. We're going to get into a research report, and you can actually see here on their publicly available website, the latest update that they have is from the 16th of December. This is their last PDF report that you can download on their website. And the one that we're going to read today dropped just yesterday. So shout out to the CYPRX researchers. They gather insights and documents, that most people don't come across. So, this was our report from yesterday. We were kind of just updating you guys on the geopolitical headlines, the risk appetite. We mentioned that since the middle of March, risk appetite has slightly increased. But again, I want to show you guys today in the inverse correlation that there's still a heavy demand for safe haven assets. And I firmly believe that one of the reasons outside of the dovish leaning sentiment that we got from Jerome Powell at the FOMC meeting, having some bullish impetus on the market, I believe that one of the reasons why we are seeing this slight uptick in elevation and risk appetite is because of some of the profit taking that we're seeing on the Japanese yen. Not too much profit taking on gold, but still a slight intraday pullback from its recent high. And I want to show you guys that inverse correlation once we get to that point. Okay. We talked a little bit about it yesterday, but I kind of want to show you guys a higher time frame correlation, how they line up in the dates perfectly when profit taking started happening on risk assets that inflow into safe haven, and you can see it very clearly. All right, so let's talk about this Signum research recipe for a catch-up rally. Just looking at some highlights. Number one, something that I've said in previous video breakdowns, this lady, Signum head of global research, Caitlin, she mentioned that over the past 6 to 8 months, we have seen the most bullish fundamentals for crypto that we've seen in crypto history.
Yes, certainly. And I would go even further than calling it good news. I would say that crypto fundamentals have never looked so good.
Not only that, but the Bybit hack happened, which was the largest hack in crypto history, and the market relatively it was only honestly a day's worth of fear, right? I mean, obviously, of course, there's been some mounting pressures adding to the sell-off, but it wasn't as bad as most people think. Like the market pretty much faded it out. DeFi was able to survive. The crypto market was able to survive the largest hack in crypto history, and we held above $2 trillion, right? So, I mean, she talks about a whole bunch of other bullish fundamental developments, but in a nutshell, she goes on to talk about how all of these bullish fundamental developments have not been priced in yet. She talks about also that institutions were not selling their long-term holdings.
Then we also have institutional adoption, really proceeding. And here I would like to make the point that, the Bitcoin ETF inflows and outflows, I think have confused people and definitely affected sentiment negatively. But when we look at the period of outflows and then the period of inflows, and we overlay it with futures trades, of hedge funds, there is data on this, then we can kind of dissect whether it was market neutral transactions or whether it was actual institutional buying or institutional selling. And the evidence is that when we saw a lot of outflows, that was overwhelmingly closing market neutral arbitrage positions. So rather than institutions selling their Bitcoin holdings. And recently, when we have seen inflows, that was primarily outright buying rather than arbitrage trades.
Another thing that has stemmed to this pullback is institutions closing their arbitrage positions, their trading positions, right? So yes, there's been some selling, but that selling pressure is not coming from institutions selling out of their long-term holdings. It's institutions closing out leverage positions, arbitrage positions, and trading positions. Okay, that is a huge statement coming from an institutional research center and bank like Signum. Okay, that shows that holders, long-term institutions that have a perspective long-term in this market are still confident. Even though there's a short-term pullback, they're not getting rid of their long-term positions. She also talks about how the sentiment over the past consecutive couple of weeks since the beginning of this year has been lower than it was in FTX. That is a huge statement.
And all of this, so there were some disappointments and some negative developments, but ultimately what we saw was that it affected sentiment, and then sentiment took on a life of its own. And actually sentiment ended up decoupling from fundamentals to an almost unprecedented extent. Actually, the crypto fear and greed index, which is kind of a measure of market sentiment, was lower recently than in the wake of FTX. And that's crazy. That's crazy. In the wake of FTX, the fundamentals were very poor. Institutions were walking away. The market just had a ton of scandals and scams and fraud, and regulators were very much cracking down and in a, not in a helpful way, not in a let's clean things up, but basically just preventing innovation and preventing business. The political headwinds were very real. It was crypto businesses were getting debanked. It was very hard to get going and to actually build anything in the crypto space. And these truly negative fundamentals justified a better sentiment or a less terrible sentiment than what we saw quite recently.
Right? Because it just shows resiliency of the total cryptocurrency market, right? It shows the stability of this space. And I mean, the fact that she said that shows that if financial institutions thought that FTX was an opportunity to get into the markets, right? When the sentiment was that low, which I've physically proven institutions on stage saying that to be the case.
Absolutely. So the key point is also you're making the FTX disaster and the other disasters we've seen have not led you and your colleagues to close down crypto projects and so on. Yeah.
Absolutely not. Rethinking it and just focusing on the real necessary points, but not stopping it, not at all.
Perfect. And Andre, you already explained it.
Then what do you think they're thinking of now, considering that she just said institutions aren't selling their long-term holdings and the sentiment now is worse than it was during FTX? Institutions are going to see that as an opportunity, right? So the reason why I think you guys should watch this is that it just goes to show that even though the sentiment in the short term right now, maybe even over the next couple of months, if things continue to worsen, will be bearish, but the long-term trajectory of this space is still overly optimistic, and none of that has been priced into the market yet, right? So this just kind of goes to back our overall perspective that once this short-term volatility to the downside and this risk-off sentiment subsides, we're going to see another leg up that I personally don't think people are mentally and financially prepared for because they're fearful right now.
One of the fascinating things, and I think Sergey on stage earlier was referencing, stablecoin legislation, I think is close. I have heard from some tier one banks that they may issue their own US dollar stablecoin. And, hard for me to predict how that plays out.
Yeah.
But, that also is evidence that they're leaning in a way they haven't before. And again, if there's one thing I would emphasize to this audience, we are underestimating the tailwinds from the shift of the last 6 months. The largest economy in the world has been quite hostile to our industry and is now moving the other direction quickly. And I think we underestimate those tailwinds.
Yeah, absolutely. I totally agree with that sentiment.
All right. She talks about how crypto is currently heavily correlated to risk assets, which is again something that we talk deeply about in this community. Um, Ron, I believe you and I have discussed, or it was somebody in this community where we discussed the possibility of crypto decoupling from risk assets at some point in time in the future. And she also talks about that as well to a certain degree. She talks about how crypto goes through these phases where sometimes it's correlated to risk assets and sometimes it's not, right?
And this gap between the actual fundamentals of political and regulatory support, move on reserves, institutional adoption, all of that going forward is glaring. And I think it really could just happen because the post-election euphoria disappointments just basically left the market without a narrative. They left the market kind of rudderless. And then the vacuum was filled by macro news. And basically, people need something to talk about and something to latch onto. And the crypto market latched onto macro news. And the environment for risk assets has been poor. And crypto just basically moved to exhibit a very, very high correlation with risk assets, but in a high beta manner. So kind of same direction, but going much, much further.
And so right now we are in a heavily correlated environment where right now, because of Trump coming in, because of his tariffs, and because of all the uncertainty surrounding central bank positioning, economic activity, there's a lot of uncertainty. And so that is, again, being reflected in the price of crypto, which is now in this environment correlated to risk assets, right? And it's temporary, is what she's saying. And then it changes, and it could change if we see some type of catalyst that is enough to shake the market uncertainty, or if we see the market uncertainty start to dwindle away and we start to see a slew of positive developments come back in on the economic landscape, right? So just be mindful of that. She also talks in detail about how tariffs affect crypto.
Tariffs directly have nothing to do with crypto. So I mean, just to make that point, so it only affects crypto indirectly because it affects the macro picture, and when the correlation is high, then through that backdoor, it would have an effect. But even on tariffs, I think the problem, like the tariffs could work out very well for the US. Generally, tariff wars are won by countries that are self-sufficient.
So she doesn't, let me put it this way. She says that crypto is not directly affected by tariffs. Tariffs don't affect crypto, but tariffs affect the economy and the economic outlook. And the economic outlook deterioration, or a fear of higher inflation due to tariffs, right, creates economic uncertainty, investor uncertainty, which then dwindles down to affecting crypto because that market uncertainty affects risk assets, and crypto is correlated to risk assets. So she broke that down in a very effective way for anybody with a basic knowledge and understanding to comprehend words can understand, which I really like. All right. So definitely go watch this because it's almost as if you're on a CYPRX Zoom call, which I again really like because it just goes to show that we are talking about the same things that some of the largest banks involved in crypto right now are talking about, which just backs my claim that this is what people should be paying attention to and not all the other crap out there in the market. And you can see the views on this, right? We shared this in the group chat this morning or this rising, and it was streamed 3 hours ago and still only has 15 views. So myself, probably 2 or 3 of the other CYPRX researchers have seen this, and I'd say probably like 5 or 10 of you guys in the community are the ones who have seen this in terms of the view count on this video. All right.